Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news on no change Fed has brought sharp market reactions, bolstered by an odd tariff twist. As expected, the US central bank left its key policy rates unchanged in the 4.25 to 4.5% target range for a fifth consecutive meeting. They see the data pointing to a moderation in economic activity during the first half of the year, contrasting with earlier assessments that the growth was proceeding at a solid pace. They noted that the unemployment rate remains low while inflation remains elevated, and uncertainty about the economic outlook persists. The vote was 9-2, with both dissenters wanting a lower rate and both wanting to be chosen by Trump to replace Powell. Markets are still digesting the Fed signals, but immediately after, the US dollar rose, although not significantly. The US Treasury 10-year yield was little changed initially, but then rose, but only slightly. And the S&P 500 rose, but then equally quickly gave that bump up and is now lower. Gold kept falling. Bitcoin yawned, holding at the unchanged level it's had for the past 3 weeks, but then it woke up and fell out of that range, down 1.3% today. Although US home loan interest rates were unchanged last week, mortgage applications fell, both for refinancing and for new purchases. And the June pending home sales report, also out today, paints a worrying picture for their housing sector, with sales 2.8% lower from a year ago. 8 of the last 12 months have recorded year-on-year decreases. And the July labour market report will be released on Saturday New Zealand time, and it is expected to record a modest 110,000 jobs growth. Today, the precursor ADP employment report was released, suggesting private payrolls grew 104,000. The first look of the second quarter 2025 US GDP growth rate is out, showing a 3% rise and better than the expected 2.4% result. But almost all of this is due to rising imports, up 5%. Consumer spending contributed less than 1%. Investment activity was 3% negative in this result. Public spending and exports both made almost zero contribution. Although 3% is good overall, it is an unhealthy twist, although it may not last. Of more concern is the dive in investment. North of the border, the Canadian Central Bank also reviewed its monetary policy decision overnight, and it too held its rate unchanged at 2.75%. In the EU, the July sentiment surveys were out for the bloc, and while they improved, in fact they remain in their long-term range, so essentially no change there. In Singapore, their central bank equivalent, the Monetary Authority of Singapore, kept its policy stance unchanged at yesterday's update. In Australia, and led by a fall in services inflation, overall CPI inflation dropped to 2.1% in the second quarter of 2025 from 2.4% in the prior two periods, marking its lowest figure since the first quarter of 2021 and below forecasts of 2.2%. June inflation alone was only 1.9% above year-ago levels. Today's data removes any awkwardness posed by inflation remaining too high for the RBA, and they are now very much more likely to cut by 25 basis points on August the 12th to 3.6%. On the tariff war front, the US has imposed a 50% tariff on copper imported into the country, but then made a bewildering exception for refined copper. Traders had been stockpiling copper ahead of this decision, but weren't expecting the exception. So there is far more copper refined in the US than they need, at a cost they don't need. It has caused havoc in the copper price overnight with an immediate 20% drop. The US imposed a 25% tariff on imports from India. Talks with China have been inconclusive in Stockholm and will no doubt drag on unresolved over the 90-day extension period. China will count that as a win. The US Treasury 10-year yield is now at 4.37%, up 4 basis points from yesterday. And the price of gold will start today at $3,277 an ounce, down $50 from yesterday, and most of that after the US Fed decision. And American oil prices have risen another $1.50 to be just under $70.50 a barrel, while the international Brent price is now just on $73.50 a barrel. And the Kiwi dollar was at 59.2 US cents and down 30 basis points from yesterday before the Fed decision. Then it fell another 30 basis points to 58.9 US cents. Against the Aussie, we were up 20 basis points at 91.6 Australian cents. Against the euro, we're unchanged at 51.6 euro cents. That all means our trade weight index starts today at 67.2, down another 30 basis points from yesterday. And the Bitcoin price started today at $117,766, essentially unchanged again. But after the Fed decision, it took a 1.3% tumble. Volatility over the past 24 hours rose to plus or minus 1.2%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.